Well, I think the worst part of it is that there'll be ultimately the world's most expensive divorce, but like most divorces, it's probably going to take a lot longer than it should. Once they do trigger Article 50, the EU has 2 years to work things out with them. But at the end of that, there's another curious process, which is that at least 20 of the EU member states must approve, and those 20 must constitute at least 65% of the population. So it's not an easy thing to end, and I think the longer it goes on, the more severe the consequences will be for everyone, because business hates uncertainty. Now, I do think that there are complications that give Britain some negotiating strength. One of them is that there are 3 million EU residents in the UK, and there are 1.2 million UK residents have migrated to the EU. Something has to happen with them. That's a lot of people.
So,
UK trade deficit with the rest of Europe is about 8.3 billion pounds a year. And Germany is the largest single exporter to UK. It's about 15.1% of EU exports.
Wilbur,
So those are some factors.
When you look at the markets and how they've reacted thus far, you say to yourself, they haven't gone far enough. We're overestimating the potential problems. I know you said that the longer this plays out, the worse it is. But how do you measure that? And as an investor, how are you thinking about it?
Well, I bought some pounds on Friday in the break there. May very well buy some more pounds today. I do think it's not the end of the earth. Great Britain is not going to go to zero, whatever happens. So I think it's easy to have people be too emotional. I also think there were some pretty big short positions in the hedge fund community, both in the pound and the euro, and at some point they'll be covering as well. So there'll be some natural demand coming into the market. But I really do think getting it over with quickly, whatever is going to be the outcome, would be better for everyone. And
how do you think about the equity market, not just in the UK, but the after effect, or the shocks, if you will, around the rest of Europe, and the worries, really, I mean, it becomes a political bet that either Europe stays together or doesn't, and then what happens?
Well, I think it's clear there will be other referenda within Europe. You've got all the Eurosceptic parties now feeling legitimatized, so there will at least be votes. How they'll come out is anybody's guess. But a few weeks ago, the Pew Center in Philadelphia made an interesting survey country by country, and even in France and even in Germany, a majority of the people polled said they preferred EU to be less intrusive in their local affairs than it is at present. So I think that as a minimum, there's likely to be a rollback in the momentum toward total political unification within Europe. Whether some individual country goes out is really hard to forecast, but I think the worse that the UK market becomes, the less likely it is that those petitions will succeed.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.